Have you ever wondered why some investors quietly build lifelong wealth? Imagine turning small savings into financial freedom without rushing or gambling. Most people chase fast profits and lose everything within a few months. But what if slow investing was actually the real secret to success? Today, we uncover how patience in stocks can change your entire future. This journey begins with understanding money, discipline, and emotional control together. Many beginners enter the stock market dreaming of overnight millionaire success stories. However, real investors know that slow growth creates the strongest financial foundation. Think about planting a tree that grows stronger with every passing year. Stocks work similarly when you allow time and patience to compound returns. Have you ever seen someone regret selling investments too early and panic? That emotional mistake destroys more wealth than any market crash ever could. Successful investors treat the stock market like a long-term wealth-building machine. They avoid emotional trading decisions that often lead to unnecessary financial losses. Slow money growth is not exciting, but it is extremely powerful over time. Imagine your money working silently for you, even while you are sleeping. That is the magic of compounding when patience becomes your strongest strategy. But most people never experience this because they constantly chase quick profits. The truth is, markets reward discipline far more than excitement or speed. Understanding this principle is the first step toward building real financial success. Have you ever asked why rich investors rarely panic during market crashes? They understand that temporary declines are normal in long-term wealth creation. Fear causes beginners to sell low and buy high repeatedly over time. This emotional cycle prevents most people from achieving consistent financial growth. Slow investing breaks this cycle by focusing on patience instead of reaction. It teaches you to trust time rather than constantly predicting market movements. Every major investor started with small steps and long-term thinking strategies. There is no shortcut that replaces patience in wealth building. Through stocks, even small monthly investments can grow into massive wealth with discipline. The stock market rewards those who stay invested through uncertainty and noise. Many people underestimate how powerful consistent investing can become after years, but those who stay committed eventually see life-changing financial transformations happen. Think about where you could be financially after 10 patient investing years. That vision alone is enough to change how you approach investing today. The journey is not about timing the market, but timing the market. This mindset separates successful investors from emotional beginners chasing quick gains. Every decision you make in investing shapes your long-term financial reality. Slow wealth building is not glamorous, but it is extremely reliable and steady. Most financial failures happen because people want results without waiting enough time. Patience becomes your greatest asset when markets become unpredictable or stressful. Even experienced investors remind themselves daily to stay calm during volatility because wealth grows best in silence, not in constant panic or noise. If you stay consistent, small investments eventually turn into powerful financial outcomes. This is why disciplined investors never stop investing during market downturns. They understand downturns are opportunities disguised as fear. In financial markets, every crash in history has eventually been followed by strong recoveries. Those who stayed invested always benefited from those long-term recoveries significantly. The key is learning to trust the process instead of emotions. Your financial journey depends on how well you control impulsive decisions. Slow investing is not about luck, but about disciplined decision-making every time. Most people quit too early because they expect unrealistic short-term results, but real wealth requires commitment that goes beyond temporary market excitement. If you understand this early, you already have an advantage over others because knowledge combined with patience creates unstoppable financial growth potential, and this is just the beginning of understanding slow money in stocks. Now let's step deeper into how slow investing actually works in real life. Picture a young worker earning a modest monthly salary with limited savings. Instead of spending everything, they decide to invest a small portion consistently. At first, the growth seems almost invisible and even discouraging for many. But hidden beneath that silence, something powerful begins building over time. Every small investment starts accumulating and working quietly in the background. The stock market does not reward speed, but rewards consistency and patience. And many beginners quit too early because they expect instant financial transformation. However, real investors understand that wealth grows slowly, like layers of time. Think of it like building a house brick by brick without rushing progress. Each investment adds another brick to your long-term financial structure and stability. steadily. Over months and years, those small bricks form something incredibly strong. Have you noticed how people regret not starting earlier in life? That regret comes from underestimating the power of small, consistent investing. Even simple index investments can grow significantly when held for long periods. Many successful investors began with small amounts in ordinary financial situations. What separated them was discipline, not high income or lucky opportunities. They understood that time is more powerful than timing the market correctly. Imagine investing just a small amount every month without missing a single contribution. Over time, that habit builds financial discipline stronger than any motivation speech. Real wealth is not created by sudden wins, but repeated patient action. And most people fail because they abandon their plan during short-term market fear. But markets are designed to test your patience and emotional stability constantly. Staying invested during uncertainty is where true financial growth actually begins. Think about long-term companies that quietly grew into global giants over decades. Investors who trusted them early were rewarded with massive wealth creation. But those who sold early missed the most powerful growth phases entirely. This is why patience becomes more important than prediction in investing success. No one can consistently predict short-term market movements with accuracy. However, everyone can choose to stay invested for long-term growth benefits. The difference between winners and losers often comes down to emotional control. Fear makes people exit too early, while patience builds long-term financial security. Even during market drops, smart investors continue their regular investment habits. They see falling prices as opportunities rather than financial disasters or threats. This mindset turns market volatility into long-term advantage instead of loss. Slowly, the investments begin compounding and accelerating without constant attention. Compounding is like a silent force that grows stronger with time. It multiplies returns not just on your money, but on previous gains too. That is why early and consistent investing creates exponential financial growth. Imagine your money working every year while you focus on your life. That freedom does not come from luck, but from disciplined investing habits. Many people underestimate how powerful 20 years of investing can become, but those who stay committed see life-changing financial outcomes eventually. The stock market rewards patience more than intelligence or complex strategies. Even simple investing strategies outperform emotional trading over long time periods. Your biggest enemy in investing is not the market, but your impatience. Once you learn to control emotions, investing becomes significantly easier and rewarding. Every month you invest strengthens your financial future silently and steadily. Over time, small actions create results that seem almost unbelievable at first, but those results are simply the power of consistency and patience combined. Successful investors never rush because they understand wealth is a long journey. They focus on progress rather than immediate financial gratification or excitement. This mindset allows them to stay calm during every market situation, and that calmness becomes their greatest advantage over emotional market participants. Now, let's explore a deeper truth that most investors completely overlook. Now comes a deeper truth that completely changes how most investors think. Slow investing is not just patience, but also strategic behavior control discipline. Many people believe stock market success is only about choosing right stocks, but real twist is behavior matters more than stock selection itself does. Even perfect stocks fail when investors panic and sell too early often. The real enemy in investing is emotional reaction during volatility periods markets. Here's the surprising twist most beginners completely fail to understand fully. Consistency in small investing beats large one-time investments every single time period. Dollar cost averaging quietly removes emotional stress from investing decisions entirely over time. Many investors lose money not from markets but from their reactions alone. A hidden insight is that time in market beats time in market always. Most beginners focus on price changes instead of long-term ownership value growth. Another twist is that volatility actually creates opportunity for disciplined investors always. Market drops are not losses but discounted entry points for wealth building. This mindset shift separates emotional traders from long-term strategic investors completely apart. Fees and taxes silently reduce wealth if investors ignore long-term planning carefully. Even small percentage losses accumulate significantly over decades of investing time horizon. Diversification quietly protects investors from unpredictable market shocks and downturns over time. Many people underestimate how powerful patience becomes during extended extended market cycles periods. The greatest returns often come after years of silent accumulation phase growth. Emotional discipline is more valuable than complex trading strategies combined together. Long-term survivorship bias hides the many investors who quit too early and lose. Real wealth builders ignore noise and focus on long-term compounding growth path. Even professional investors rely heavily on time rather than prediction accuracy itself. The paradox is that doing less often results in earning more wealth. Index investing quietly outperforms most active strategies over long durations of time. The stock market rewards patience like nature rewards consistent rainfall patterns over time. Panic selling destroys more wealth than market crashes ever do in reality. Long-term investors see downturns as temporary phases and growth cycles always truly. Compounding accelerates only when investors remain patient through uncertainty over long term. Small losses are acceptable, but emotional decisions are extremely costly over time. Many investors fail because they treat investing like gambling, short-term thinking. True investors think in decades rather than daily market movements, fluctuations only. Wealth creation becomes predictable only when discipline replaces emotional trading habits completely. Missing best days in market drastically reduces long-term returns performance over time. Emotional investing creates cycles of buying high and selling low repeatedly behavior. The biggest advantage is staying invested during uncertain market conditions consistently always. Long-term charts always show upward trends despite short-term fluctuations, volatility over time. Real investors focus on process rather than short-term financial outcomes, results only. The twist is that simplicity often beats complicated investment strategies always significantly. Patience transforms ordinary investors into consistent wealth builders over time, gradually always. Most failures happen due to impatience rather than bad investment choices usually. Investing slowly gives your money time to recover from shocks fully always. Market corrections are normal parts of long-term wealth creation journey process always. The key insight is that time reduces investment risk significantly over time. Most people misunderstand risk because they focus on short-term volatility only instantly. Real risk is not volatility, but permanent loss of capital over time. Smart investors accept volatility as price for long-term growth opportunity in markets. Every downturn teaches patience and strengthens future investment discipline over time always. The secret is not timing markets, but trusting long-term systems process completely. Wealth silently builds when no one is paying attention. Daily markets constantly. Investors who quit early never see true power of compounding growth fully. Discipline in investing is more important than intelligence or luck, always significantly. The real twist is patience itself becomes your strongest investment tool ever. Now let's move toward the final truth that changes everything forever completely. Now we reach the final stage of understanding slow wealth creation through stocks. At this point, everything you know about investing should start shifting deeply. The real secret is not in complexity, but in consistent, disciplined action. Wealth is never built overnight, despite what social media often suggests today. True financial freedom comes from patience, not excitement or emotional decision-making. Imagine your future self thanking you for starting small investments today consistently. Every successful investor once started exactly where you are standing right now. The difference is they chose discipline, while others chose instant gratification instead. You do not need perfect timing, only consistent effort and long-term vision. Even small steps today can reshape your entire financial future completely over time. The stock market rewards those who stay calm during emotional chaos periods. Most people fail because they abandon strategies during temporary market discomfort phases, but discomfort is often the doorway to long-term financial growth opportunities. Think about how many people give up just before success becomes visible. That pattern repeats in investing, business, and every wealth building journey everywhere. Slow investing teaches you to respect time as your greatest financial ally. Time multiplies everything you consistently place into the market over years. Your money grows silently while you continue living your normal daily life. This silent growth is what eventually leads to financial independence and freedom. Many people underestimate how powerful consistency becomes after long periods of investing. Even market uncertainty cannot stop disciplined investors from reaching their financial goals. The key is not reacting emotionally, but responding with calculated patience always. Every market dip becomes a stepping stone for long-term wealth accumulation process. Instead of fear, experienced investors see opportunity hidden within temporary declines. This mindset completely transforms how you perceive financial markets and risks. Wealth creation is more about psychology than technical market analysis skills. Once your mindset changes, changes, your financial behavior automatically improves over time. Small investments consistently repeated create massive results through compounding power effect. The earlier you start, the stronger your financial foundation becomes later. But even starting late is better than never starting at all, ever. There is no perfect moment, only consistent effort applied over time. Financial freedom is built slowly, one disciplined decision at a time, always. Many people wait for ideal conditions that never actually appear in reality. Successful investors act despite uncertainty and grow through experience over time. The market rewards patience more than prediction or intelligence combined together. You do not need to be perfect, just persistent in your journey. Every investment you make is a step toward future financial independence. Think long term and avoid distractions from short term market noise constantly. Discipline today creates freedom tomorrow that most people only dream about. Your financial journey depends entirely on the choices you make daily. As slow investing is not boring, it is quietly powerful beyond imagination. It transforms ordinary earners into long-term wealth builders through consistency. Emotional control is the foundation of every successful investing strategy ever. Without it, even the best opportunities turn into costly financial mistakes. Stay focused on your plan, even when markets feel uncertain or confusing. Remember, every great investor once faced fear, but chose patience instead. You are now aware of a truth many people never understand fully. The real power lies in staying invested through all market conditions. Trust the process, trust time, and trust your disciplined financial decisions. Your future wealth is being shaped by your actions starting right now. Do not rush the process because greatness takes time to develop fully. Consistency will always outperform emotional bursts of effort in investing world. Let your money work quietly while you focus on building your life. The journey may be slow, but the destination is financially life-changing. Now take action today and begin your slow wealth building journey immediately. At this final stage, everything comes down to one powerful mindset shift. Slow investing only works when your mindset stays steady and disciplined always. Without the right mindset, even the best strategy fails over time. Wealth is not created by chance, but by repeated intentional decisions daily. You must learn to trust the process even when results feel invisible. Most people quit because they cannot see immediate rewards from investing early, but invisible growth is often the strongest foundation of lasting financial success. Every market cycle teaches patience to those willing to stay invested long. Fear will always try to pull you out of your long-term plan. Discipline is what keeps you moving forward when emotions try stopping you. Think of investing as a lifelong journey, not a quick destination race. The longer you stay consistent, the more powerful compounding becomes over time. Small investments today can become extraordinary wealth in the future decades ahead. Your financial destiny is shaped by habits you repeat every single month. Successful investors are not lucky. They are simply consistent and patient always. Even during uncertainty, they continue building wealth silently and without panic. The stock market rewards those who stay calm when others become emotional. Every drop in the market is another opportunity disguised as temporary fear. Those who recognize this truth build wealth while others exit too early. Your biggest advantage is time, not intelligence or advanced market predictions. Time multiplies every disciplined investment you make without exception over years. Many people regret not starting earlier, but consistency matters more than timing. What you do today will define your financial freedom tomorrow completely. There is no shortcut that replaces patience in long-term wealth building. Every expert investor once started with uncertainty and small beginnings too. The difference is they stayed consistent when others gave up quickly. Emotional control is your strongest weapon in unpredictable financial environments always. Without control, even simple decisions become costly mistakes over time. Slow investing teaches you to think long-term instead of reacting instantly. This mindset transforms your entire approach toward money and financial growth. Every year you stay invested increases your financial strength significantly further. Compounding quietly rewards those who remain patient through all market conditions. You do not need perfect conditions to start building your wealth. You only need discipline, patience, and a clear long-term vision ahead. Even small steps taken consistently can lead to massive financial outcomes. Many underestimate how powerful steady investing becomes after several years pass, but those who experience it understand its life-changing financial impact deeply. Your journey is not about about beating the market, but staying invested. Wealth grows quietly, not loudly, through years of disciplined financial behavior. Ignore distractions that push you toward fast money or risky decisions. Focus instead on building something that lasts for your entire life. Slow investing is simple, but simplicity requires strong mental discipline always. Every decision you make should support your long-term financial future goals. Trust and consistency more than excitement or temporary financial trends everywhere. Financial freedom is built step by step, not through sudden miracles. Your patience today will become your greatest reward in future years. Stay invested, stay calm, and stay committed to your financial journey. The process may feel slow, but the results will be powerful. True wealth belongs to those who never stop believing in compounding. Your future success is already being shaped by your current actions. Keep investing, keep learning, and keep growing your financial discipline daily. One day, you will look back and appreciate your patience today, because slow investing quietly builds the strongest financial freedom possible ever. And that freedom is worth every moment of patience you practice. Now begin today, stay consistent, and let time build your wealth.